Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. Now, we are headed down a road toward economic destruction. And the end game, well, the end game is going to get pretty ugly. Gold and silver, these are going to be critical assets for weathering the coming storm and getting through the coming crisis. Let's kick today's live stream off with this alarming headline. U.S. national debt up $167.9 billion sparks fear of a crisis. And this story, now they're using an outdated screenshot of the national debt, and this is published by the Crypto Times a couple days ago. But nonetheless, their math rings true. Over the past 20 days from the time this article was published, the national debt had increased $167.9 billion. Now, forget the source. I mean, who cares? It's from a crypto website. Again, this is just math, and we don't have to, speculate about these numbers. It's just a fact that the debt is increasing at an incredibly rapid pace. Let's take a look at the debt to the penny website here, courtesy of the U.S. Treasury. So their own numbers. Now, if we look, the most recent data, March 25th, total public debt, $34.598 trillion. We have since then surpassed the $34.6 trillion, but let's just use that data point. So March 25th, $34.598 trillion. Now, if we go down to the beginning of the month here, you can see the data for March 1st, $34.393 trillion. Now, if you do the math, that is over 25 days, about $250 billion of spending. Money that we do not have. Comes out to about $8.2 billion per day that we are spending that we do not have. I mean, just try to wrap your head around that. I mean, are you getting anything out of this spending? I don't think I am. I don't seem to be on the receiving end of any of these benefits. And yet, the currency is being debased. And the rate at which it's currently being debased, I mean, it's peanuts compared to what is coming. Because ultimately, the end game for all of this deficit spending, and this is all going to have to be monetized by the Federal Reserve, by the printing press. I see Brian Kerr says, we are not spending, they are. Yeah, that's true, but they are spending in your name, sir, and they are spending in the currency, if you live in the U.S., that you get paid in, that you transact in, and that's why everything is getting so much more expensive. At least that's part of it. And don't anticipate this rate of spending to slow down anytime soon. We have got a $7.3 trillion budget being proposed by the current resident of the White House. So that represents a significant increase from current spending levels. Will that budget get passed? I don't know. But, some version of it will, certainly. They just passed this omnibus spending bill recently in Congress to avoid a government shutdown. Another trillion, I think it was $1.2 trillion spending bill that they passed just to keep the doors open at the government. And yet they can still manage to find all of this money to send abroad, to pay for foreign wars. Domestic spending is out of control. They're going to need to spend some on infrastructure after what we saw happen the other day in Baltimore. I mean, not to diminish that tragedy, but seriously, the amount of spending at the federal level here is just getting absolutely out of control. And look, I mean, today's video is sponsored by SD Bullion. I'm just going to show you a sale they have right now that I think is a pretty solid one. They've got a 1 ounce silver Buffalo round tube of 20, 99 cents over spot. Now, a couple things you can take away from that. It's a great deal, certainly. I mean, I love, the Buffalo rounds. These things are, whoops. It's the beauty of a live stream. Might see me drop some silver. It's a, iconic image. It's a very recognizable piece of silver. And also, the fact that you can still get these for 99 cents over spot. Sure, the spot price has risen, but premiums have not. And this shows us that we're still at the very nascent phases of a bull run in the metals because the public at large is not moving into these things. So look, I don't give financial advice, but I think now is a good time to take advantage of premiums before they rise. Now, this path that we are headed towards, economic destruction, a debt crisis, potentially the loss of the dollar status as the world reserve currency. Now, I know that that seems, unthinkable, but there's a lot of things which we're going to see, I think, in the coming months and years, which previously would have been thought unthinkable. And the vast majority of the public, I mean, it's going to make their head spin, right? Because what are we being told? We're just being told that everything is fine, right? We got strong economy, strong job market, inflation is coming down. This is all you seem to hear out of the talking heads and the powers that be, the political elites, the central bankers. And it's going to really catch a lot of people by surprise. And that's going to be a huge problem because, I think people are going to be really pissed off when they find out how bad the economic situation here really is. This strong economy that we have is only being propped up by deficit spending. You keep seeing this, strong GDP number comes out. Strong GDP number, strong GDP number. We're not in a recession. Look, the GDP, it's rising. The economy is growing. They don't tell you that the debt is growing even faster. I mean, where do you think all that GDP is coming from, right? It's because we're borrowing huge amounts of money from the future, spending it into the now on weapons, on war, on social welfare programs. I mean, really anything you can shake a stick at, federal government is spending huge amounts of money. If you look at some of the goofy stuff that was included in that omnibus spending bill, it'll get your blood pressure up. I mean, it really will, because it's so crazy and it's not like we have the money to spend. But the name of the game here is inflating the currency. You got to understand that. I mean, that is really the one thing that central banks are good at. It's the only tool they have. It's the printing press. And let's shift gears here a little bit and talk about one of the trends which is going to lead us down this economic nightmare rabbit hole, and that is the nascent World War III. I mean, we're going to cover a lot of stuff in this video, but I mean, look, this is a warning that we got from a Polish minister here who, according to, now this is, to be fair, a bit of a tabloid headline. This is from express.co.uk. NATO issues horror World War III warning after Russian missiles cross alliance's border. But the point that is being raised in this article is incredibly important for the situation in Eastern Europe. Things there are continuing to escalate in a massive way. So recently, there was a Russian cruise missile which crossed into Polish airspace. It was there for, I think, like 30, 40 seconds, which is kind of a long time if you think about it, to officially cross into their airspace. And now, why were they doing this? Well, the Russians do this. They launch these cruise missiles from aircraft, and then they kind of try to sneak around Ukrainian air defenses, okay? Well, after that happened last week, the Poles actually, the Polish, they did not shoot down that missile. They allowed it to transit their airspace. It was kind of skirting the border. However, according to this report, Poland's Deputy Foreign Minister, Andrzej Sesna, probably saying that wrong, sorry, sir, he reports here that Russia knew that if the missile moved further into Poland, it would be shot down, that there would be a counterattack. Now, currently, he says, various concepts are being analyzed within NATO, including for such missiles to be shot down when they are very close to the NATO border. So what does that mean? That means that now, I mean, they didn't shoot down the missile that was in Polish airspace, right? Because that would have actually been kind of acceptable by international law, by standards. It's in your space, you can shoot it down, whatever. However, now they're talking about shooting down missiles that approach a NATO border. So they're talking about shooting down missiles, Russian missiles, that are actually over Ukraine. And that would mean direct engagement by NATO forces of Russian military assets. So this is a warning that we should absolutely heed. And one of the trends that you're going to witness in 2024, I mean, we've been talking about this for much longer than this year, but the conflicts around the world are going to continue to escalate. And that means a lot more war spending, a lot more devaluation of the currency. You can guarantee it. Here's another one. Satellite images reveal Chinese military's mock targets in the desert. What were the targets that the Chinese had set up out in the desert? Well, according to this report, they were, satellite images showed a mock version of Taiwan's presidential office at a military training site in China's Inner Mongolia. So we know what the Chinese are preparing for. They're preparing for reunification with Taiwan, that, the territory that they believe is part of their territory. I don't really have a dog in this fight. I don't live in Taiwan. I don't live in China. I do live in the U.S., though, and the problem here is that we are likely going to be involved in this conflict. And, opinions about whether we should be involved in it or whether we shouldn't be are kind of moot, if you ask me, because the reality is that it's going to happen. I mean, it's very likely we're going to be getting drawn into a conflict here, that part of the broader World War III, which is playing out before our very eyes, right? I mean, those who believe that World War III isn't already underway, I think from a historical perspective, looking back on this time from the future, it will be clear that the events that lead to the Third World War, I mean, they already are well underway, and it's only a matter of time before we see some provocation lead to open warfare between NATO and these various parties which are antagonistic to NATO around the world, whether that be Iran in the Middle East, whether that be China in the South China Sea, whether that be North Korea on the Korean Peninsula, whether that be Russia and Belarus in Europe, Venezuela in Latin America, perhaps. I mean, who knows, right? This thing is heating up and nobody knows where it's going to end. But I think one thing that you can guarantee about any conflict is it's going to be very expensive and it's going to be very inflationary and destructive of wealth. Now, another thing I want to take a look at here is the debt clock. So as you can see here, we're now at $34.6 trillion in debt. The official U.S. federal budget deficit just under 1.8 trillion. The number that they give you, the actual number, 1.939. Well, listen, if you take the spending that we talked about a few moments ago, the $205 billion spent and borrowed, I guess, borrowed money that was spent between March 1st and March 25th. Okay, $205 billion. If you annualize that, that gives you a deficit of just under $3 trillion. So, these projections, these numbers that are released by the government, they all are designed to understate the real nature of things. I mean, if you just do the math, it's very simple. Between now and March 1st, you take that level of deficit spending and you extrapolate it, you get almost a $3 trillion deficit annually. And look, that number is going to get much, much higher as we enter into an economic downturn and the government is forced to increase deficit spending to try to stave that off. I mean, they're already doing that. But once we get, a severe economic downturn here, who knows if that's going to hit before the election, but it's likely to hit soon. The only thing keeping this thing propped up is the massive amounts of borrowing and cash being injected into the system. It's going to have to expand massively to prevent a collapse of the financial system, the banking system, to bail out the government itself. I mean, a huge amount of money is going to have to be printed. You look at the scale of the debts, right? $34.6 trillion. How do you pay that off? I mean, there's no way. Massimo Ruccio says, any good news at all, humanity? Well, there is some good news. One, I mean, I guess hopefully maybe we'll get AI out here, which will either destroy the planet or it could issue in an age of bounty. Maybe we'll have some miraculous salvation from this debt in the form of technology, but I don't really buy it. I'm not waiting for that. I'm not holding my breath. Another piece of good news is that you can still get silver, hard assets, for incredibly cheap. I mean, this stuff is at half of its 2011 high. Gold, even though it's currently, like today, over $2,200, new all-time record highs, or hovering just around the all-time record high, still an incredibly undervalued asset by any measure, I think. If you just look at the inflation-adjusted all-time highs, it's incredibly undervalued. If you look at the Dow to gold ratio, despite the fact that gold has increased and it is near record highs, paper assets have inflated even more. So, the fact that gold and silver are still incredibly undervalued, I think, is good news for those of us who are paying attention, because these things really are going to be critical to survive the debt crisis, the currency crisis, which is ahead. Now, I don't know exactly how that'll work out. Will it just be that gold and silver appreciate significantly in purchasing power or in nominal price? Will it be that we get a new financial system and these are a way to transfer your wealth over to that? I'm not sure. I don't have a crystal ball, but I do know that trusting in fiat currencies at a time when the world is deglobalizing, when central banks around the world are going to be printing huge amounts of this fiat currency that is in a race to the bottom, well, I don't think it's a good time to be trusting in paper. I mean, let me know what you think. Do you think it's a good time to trust in paper? Put a 2 in the chat. Put a 3 if you'd rather hold hard assets. I mean, I don't even know why I bother polling this audience because I'm sure most of you have a pretty good understanding of what is coming. But I mean, just speaking of central banks, what are central banks around the world doing? I mean, Western central banks are cutting rates. They are already cutting rates. We've got the Swiss central bank cutting rates in a surprise move, according to this report from Reuters. Now, to be fair, I mean, I didn't anticipate that the Swiss central bank would be the first one to cut. I think this kind of came out of left field for a lot of people. But the fact that central banks are going to be cutting rates in a significant way shouldn't come as a surprise to anybody. And it's not just the Swiss. I mean, the Federal Reserve is going to be cutting rates as well in a huge way. I mean, we know that, right? They're telling us that. This is no secret. They have to do it. We have a financial system which is on the verge of collapse. We have an insolvent banking sector. And look, you don't have to even read between the lines here. The Fed dot plot from the recent FOMC meeting, it shows us that they're planning to cut, right? I mean, this is a chart of where the FOMC market participants or the FOMC participants believe that the federal funds rate is going to be. So this section right here is 2024, and currently the federal funds rate is between 525 and 550 basis points. Well, look at this line right here where the majority of those polled put their forecast for where the interest rate would be. It's between 450 and 475 basis points. So that would mean 25 basis point rate cuts between now and the end of the year. And look, it's kind of already priced into the market. However, there is sort of this trepidation on the part of markets where they're not sure if the rate cuts are coming, right? I mean, the Fed told us they would be, but they will occasionally wax kind of hawkish. We had Fed, Bostich, he's telling us that there's only going to be one rate cut. So they like to be real ambiguous so that they can kind of control perceptions. But ultimately, they're going to have to cut, or they're going to witness the collapse of the banking sector, of the commercial real estate sector. This debt-addicted economy that we have is incredibly dependent on easy money. I mean, the bubbles that we currently have were inflated. Huge bubbles were inflated during the period of low interest rate, during the period of perpetual quantitative easing. Now that the punch bowl has been taken away, the Fed has been tapering their balance sheet. Now, to be fair, I mean, they haven't tapered the balance sheet very far. It's still far, far above even pre-pandemic levels, but they've been taking it down a little bit. They've sold off a little over $1 trillion of these mortgage-backed securities and government treasuries. And what has it created? I mean, look at New York Community Bank Corp, right? A bank that nearly failed if it wasn't for the intervention of former Secretary of the Treasury, Steve Mnuchin, recently. They probably would have failed, but he came in there with a multi-billion-dollar bailout. So, and I think now's a good time to pause. We got a lot more to cover as we go through here, but we got 353 people in the live stream. Huge thank you to all of you who are watching. Do me a favor, subscribe to the channel if you haven't done it yet. Smash that like button. Help get this information out into the algorithms. The more people who get prepared for what is coming, the better off we will all be. Now, here's a trend that is alarming, and I think this one could be the one that really creates a breakout for silver. Okay, now again, I don't have a crystal ball, but this is one hypothetical scenario that I think could lead to a breakout in the price of silver. This is the month-over-month rate of inflation here, okay, from CNBC, and you can see the end of 2023, we were told we had the disinflation. Inflation was coming down. It was, the Fed was winning its fight. Well, what has been happening for the past several months? The month-over-month rate of inflation has been creeping higher, okay? And the CPI, core CPI, and headline CPI remain way above the Fed's 2% target, but they're already telling us we're going to get probably 3 rate cuts this year. So what is that signaling? I mean, to me, it means the Fed is giving up on its inflation fight. But I think the event or the words potentially coming out of the mouth of the central bankers that could really cause a price breakout in silver, could light a fire under the price of both gold and silver, is when the Federal Reserve realizes that they've lost this fight and they have to adjust their inflation target. Remember, right now they're targeting 2% inflation. We're way above that. They're already talking about cutting rates. I mean, if they cut rates, do you think inflation's going back to 2%? There's no way, right? Not to mention all of the inflationary events going on around the world, warfare. I mean, look at what happened in Baltimore. Yes, a human tragedy, people died. We need to keep that in mind. It's a very frightening event. I mean, if you look at that video, but there are broad implications for all of us from that. It's a very busy port, very important for exporting coal to India, so an impact on global energy markets. It's also a major hub for importing foreign-made cars. With this bridge that has collapsed there, they're seeing disruptions to the port, maybe for months, possibly years, until they get the port operating at full capacity again. More supply chain disruptions. Is it just me, or do these inflationary events just seem to continue one after the other? And look, I know that accidents happen all the time. Whether you believe that individual incident was an accident or not, I don't think really the investigation has revealed one way or the other. Certainly, kind of some strange circumstances there. But look, sometimes things just happen in a weird way. But look, I mean, we had, that explosion, last year, a year before it, that major natural gas export hub down in Texas. We have this bridge collapse. You have these major problems and small ones too, fires at, food processing plants, at meat packing plants. It just seems like the infrastructure, the critical infrastructure is decaying or falling apart at a rate that would be in excess of what would occur naturally just through accidents and happenstance. That's a kind of a long way of saying it seems like there might be more to these incidents than meets the eye. And I mean, I don't know what's going on, right? I don't think we'll ever know. But if you've got a theory about that, feel free to put it in the comments. I'm sure people will anyway. But the point is here, I think that the thing that could drive gold and silver much higher is when the Federal Reserve is forced to adjust its target inflation rate. They might just have to say, we're not shooting for 2% inflation anymore, because that's just going to be a pipe dream, and it's going to be obvious that that's the case. But if Jerome Powell comes out and says, listen, we're adjusting things, we're going to now aim for 3% inflation, and he'll probably, have some way of spinning this where it's going to be good for the economy. I think that, when inflation really gets going, they're going to find all sorts of crazy ways to tell you that it's good for you. Like, yeah, sure, your grocery bill might have gone up 50%, but hey, at least your credit card debt now can be paid off with devalued currency, right? I mean, they're going to pull out all the tricks as this thing plays out. I guarantee you that. Now, Western central banks are doing what? They're getting ready to cut, right? They're getting ready to declare victory over inflation, to stimulate their economy, to blow these bubbles up even bigger, to bail out the troubled sectors in the Western economies. And look, what are other central banks doing? What are the BRICS nation central banks doing? What are the banks in the East or the global South, the anti-US hegemon, whatever you want to call it? What are they doing? Well, they are buying up huge amounts of this stuff right here. They're buying up gold at a record pace. They are loading up on what they know is real money. Now, I mean, that is what I would call the smart money here. They probably don't have the political expediency in mind that the Federal Reserve does in terms of cutting rates during an election year, stimulating everything, getting everybody all hopped up on easy money, blowing up some more bubbles. No, because they know what the inevitable outcome of this, they know what the end game is going to be for gold and silver. They know that at the end of the day, the fiat currencies around the world are in a race to the bottom, and also specifically the dollar has been weaponized. I mean, we have huge amounts of sanctions. They are talking now about selling Russian seized assets and funding a war against Russia with those assets. I mean, if that doesn't send a clear signal to nations around the world that they need to divest themselves of their US dollar denominated assets and get into sorry, I'm laughing, folks. Someone in the chat just asked me if I'm a moon landing believer. Yes, I believe in the moon landing. I'm sure I'll be lampooned widely in the comments. So, YouTube's a funny place, folks. Anyway, that comment just caught my eye there, and sometimes you have to pause and enjoy a little bit of levity. I also believe the Earth is round, believe it or not. Now, let's back to the topic at hand here. So, central banks in the East are buying gold. I want to take a look at this chart. Look at this, the LBMA warehouse levels of gold and silver. Now, this is a very telling chart here. We have got We, oh my gosh, yes, I'm a confirmed NASA shill. All right, folks. Anyway, let's talk about something that's actually going to impact our lives here, and that is the fact that the LBMA is running out of silver. Right? I'm not trying to turn this into a moon landing debate, folks. So some people in the chat, I need to maybe get some moderators. Maybe that would be helpful. Look, you can let your mind run wild with these things if you let it. But at the end of the day, look, I mean, there's a lot of things that you might think you know that you don't know. I will acknowledge that. I try to be as open minded as possible and examine all things in silver and other areas. But uh, let's take off the tinfoil hats for just a moment and let's talk about some financial stuff that is really going to have an impact on the Western financial system. So, yeah, I know. I'm sorry, Sunshine Retired, for looking at the chat. Sometimes I can't help it. I mean, that is the fun in a live stream, right? Is that we can interact this way. The chat goes by really fast. And so every now and then something will just catch my eye for some reason. And sometimes it's an amusing comment. So it's kind of the fun of live streams. Anyway, these are the warehouse levels at the LBMA, which for silver here, you can see are significantly below now where they were in 2017, 2018, 2019, so like record low levels, right around 800 million ounces, I believe is what the number is there. You can see the gold holdings have come down, but not nearly as much as silver, right? So central banks are buying gold. Ostensibly, they're not buying silver. I mean, who knows? Maybe there is some silver buying going on by large financial institutions around the world. Here's a story from SD Bullion from March 18th, just a brief time ago, a little over a week, by James Anderson, who is somebody who really knows his stuff with the precious metals markets, about India importing 2,200 metric tons in February alone of silver. That is, that's over 70 million ounces of silver. So ostensibly, this may be going towards the production of batteries, according to this. I mean, I think that that's somewhat speculative. We don't know exactly what this industrial use is going to be. It probably is industrial because silver is a major industrial metal. But this shows that there is a significant demand for physical silver. I mean, let's talk about the fundamentals for physical silver here, real quick. Last year in 2023, there was a deficit of over 190 million ounces of silver, meaning 190 million ounces were consumed that didn't get replaced by production. Yeah, in the chat there, silver to the moon. How's that for a moon landing? That's the moon landing I want to focus on, the one that silver is likely to make in the coming years because they're not extracting enough of it out of the ground to compensate for the amount that is being consumed. And the amount that is being consumed is absolutely exploding. We have got solar demanding a huge increase in solar demand for silver, like doubling in just a couple of years. And one thing that I hear frequently when we talk about the industrial nature of silver, people will often tell me that this is actually a reason why the silver price is not going to go higher. They say silver is not a monetary asset anymore. It's just an industrial metal. Also, they will say that the industrial powers in charge will never let it rise, right? So like these industrial consumers are going to manipulate it lower using paper markets. Well, listen, I know that there is some manipulation that goes on in the paper markets. The extent to which it exists, I mean, there are those who have beliefs that kind of go along with the moon landing theories, I think, and then there are some that are a little more grounded. But we do know that they exist because there have been J.P. Morgan traders convicted of spoofing the gold and silver market. But here's the thing. I mean, if you think that there's a cartel out there that is trying to suppress the price of silver in order to keep it cheap for the industrial consumers, well, one, I mean, ultimately that will lead to deficits and shortages because the reason that the production of silver is not increasing, and I think it peaked back in like 2016 or 2017 around 900 million ounces. And now it's over 800, but it's below the peak production. The reason that's not increasing commensurate to the industrial consumption is because prices are too low, right? There's no incentive for these miners. I mean, the miners' earnings have been suffering. I mean, they've gotten absolutely beat up. I think there's a lot of, very cheap producers of silver out there, if you want to take that slightly more risky approach and invest in companies that pull this stuff out of the ground, they're actually having a pretty good day today. The gold and silver miners, if you look at those indexes, but um, if you think that the industrial consumption or industrial nature of silver means that it won't appreciate in price, I mean, I think it's quite the opposite. I believe that we will see, because of the enhanced use of industrial in industry, specifically in solar, we're going to see a huge increase in the demand. Just the supply and demand forces overwhelm any kind of paper manipulation that goes on. And you got to remember, I mean, once you run out of silver, it's very difficult to increase the production in a timely manner, right? You got to go start a mine. That can take a long time. And yeah, the industrial nature of silver, I mean, is something that silver really has going for it, not the other way around. And the reason that the solar consumption of this stuff is increasing is because they are transitioning now towards new forms of solar technology, which are more efficient. They produce more power, but they also consume more silver. It's the N junction type panels, I believe. I mean, I'm not an expert, I'm not an engineer, but there's been a lot of talk whenever I've mentioned solar in the past, where people say, well, they're going to replace silver with copper, or some base metal, or they're going to figure out a way to make solar panels more efficiently and not need silver. Well, it's actually the opposite. Now that they are coming out with these new N junction type panels. There was research in the University of New South Wales where they talked about the coming demand for silver. I did a live stream or a video on it a long time ago. You can probably find it if you go back on the channel. But there's going to be a huge fundamental imbalance in silver. There already is. We've had 4 years of significant deficits in silver, and the production is not increasing. The demand just keeps rising. So, I mean, you tell me how that winds up. It's going to mean much higher silver prices ultimately. Now, we might have to wait for that, right? I mean, look, I've been stacking for a while. I think people at this point, I know sentiment for the metals right now, it's getting a little bit of a boost because they're doing okay. They've got a couple gains, but they're still near the bottom. And to me, that's still a good time to buy. I mean, the fact that retail investors aren't piling into this stuff yet, and they're going to when the system starts falling apart, at least that's my take on it. I don't give financial advice, but the fact that they're not means that it's still a great time to be stacking. And I try not to get impatient. I mean, I understand that markets are going to move when they move. And the longer that silver remains depressed, one, it means that ultimately the ride will be, more significant on the way up, like a coiled spring, or a beach ball, if you want to use that analogy. The further you drag it underwater, the higher it explodes out when you finally let it go. But it really is just a nice thing that we can still acquire silver because, I think that there's going to come a time when premiums are higher, spot prices are much higher, and many of us will look back on these times and think, man, I just wish I had stacked more. Now, let's finish up things today with the charts of both gold and silver. I want to take a look at those because gold is really in the midst of a major breakout, folks. I think a lot of commodities are about to take off, but gold already is. And just look at this chart of gold. Now, I mean, I was talking about buying gold, I remember, back in October when it was down close to 1800. In fact, that's actually when I picked up this specific bar. Now, to be fair, I mean, I've stacked a lot more silver than gold, but I mean, I like gold and I think gold is great. I just think that silver has more upside potential. But I mean, if you bought back then, you're pretty happy right now considering that the price is, I'm going to zoom in here, up around 2193. And then, we broke out of this cup and handle formation, but look at this level that we're testing right now. The $2,200 level, I have that little blue line drawn there. We penetrated it, and this is daily candles. So we penetrated that intraday. And, it's been interesting. We've seen these spikes up in gold kind of overnight. And you've probably seen this yourself if you've been watching the price. You'll get that spike up in gold overnight during Asian trading hours. And then when U.S. markets open, the price comes down. Now, what that indicates is that in Asia, investors are buying gold, and in the U.S., they're selling, right? The selling pressure comes in when U.S. markets open. And if you go in and look at the, time, like the 30-minute chart or the hour chart, you can kind of see that on gold's chart. But the thing I want to draw your attention to is that we're coming right up against this $2,200 line, which is obviously a very psychologically important level. It's record new all-time highs for gold. And I think that when we get a close, and you can see we've penetrated this line, but we haven't actually closed above it yet. When we do close above that, and it could be any day now, that means that gold is really going to be off to the races. Yeah, now, yeah, someone says silver is barely going up, though. Yes, well, that is true. We're going to look at the silver chart next. Now, one thing you have to understand is that historically, silver runs with gold during bull markets, right? I mean, you can go back since 1971, since dollar convertibility into gold was ended. Every time you get a big run up in gold, silver runs along with it. You get a decline in the gold to silver ratio. You get silver at the end of the bull run tends to outperform gold, but it does lag gold. And I'm trying to put together some data to kind of demonstrate this, but I don't have it in a chart form to show you. So stay tuned for a future live stream where we're going to kind of get into that fact a little bit more. But look at silver's chart. We've got since 2020, we have this converging triangle, right? Yeah, it's Malice Lone Wolf in the chat there just mentioned this wedge, which I have pulled up on the chart right now. So yes, you are way ahead of me. So since the lows of 2020, those kind of freak pandemic lows, and silver was down to almost 12 bucks. Then we had the silver squeeze, moved up to about 29, close to $30. Silver hasn't been above 30, I think, since 2014. So, there's going to be significant resistance there. But once we clear the resistance that's overhead for silver and we get up to the $30 level, I think it's going to be a real quick ride to the $50 level. But this pattern indicates that silver is consolidating, right? You get higher lows and lower highs since these two time periods. And these two lines, they converge in sometime around February of 2025. So we have a little less than a year before these two lines close. Now, this pattern is sort of neutral. It's not a bullish or a bearish signal. However, when you combine this with the fundamentals that we are observing in the silver market, with the fundamentals in terms of the debt market, with the fundamentals in terms of global uncertainty and geopolitical tensions, and the breakout that we are witnessing in gold, I think there is a strong case to be made that once this top trend line here gets penetrated, it's going to be a rapid increase, a rapid breakout for the price of silver. And so, there's a lot of things that could trigger that. One of the things that could trigger it would be the Fed perhaps easing monetary policy. That is something that I think may already be priced in. However, that still, if they cut in the face of increasing inflation, that may be enough to trigger a breakout. Another thing would be the Fed adjusting their inflation target from 2%. If they say, well, now we're aiming for 3%, that could be enough to light a fire under silver. There's a lot of factors at play right now that could trigger an increase in silver. Maybe a black swan event. Now, I can't tell you what that black swan event could be because by their very nature, you can't predict them, right? So, if I could tell you what the black swan would be, if I could forecast it, by definition would not be a black swan. However, we are sitting in a situation where the financial system is extremely fragile, where the amount of money that is likely to be printed by central banks is enormous, where war is on the horizon. So the potential for black swans right now is huge and probably higher than at any time in my lifetime or really in living memory. So, look, I'm still stacking. I think that now is a good time to be getting into hard assets to protect yourself from this inevitable outcome, which I think we are going to face here, this economic disaster, whether it come in the form of a debt crisis, a banking crisis, a sovereign debt crisis, a currency crisis. There's a lot of things that could break down here. Maybe it'll be multiple things all at once. I really think that when this all plays out, there's going to be events that are going to make people's heads spin, and that the vast majority of the population is going to be taken by surprise when these things play out, because the reality is not going to coincide with what we are being told and what we have been told for years now. So I'm going to be taking advantage of the fact that silver hasn't broken out of this consolidation pattern yet. Look, maybe you want to get some gold. Maybe you say gold's breaking out, silver is too speculative. That's fine. To be fair, silver is the more speculative asset of the two. That, however, is why it lags gold. You got to keep that in mind. The psychology behind this is that when sentiment towards the precious metals is not great, and it's not great right now, investors tend to buy gold over silver because they perceive it as a safer store of value and less of a gamble. When people really start getting interested in silver, the much smaller, the much more volatile market, the much more speculative asset, is when those sentiments begin to change, right? People start chasing things. Like right now, nobody is getting fired up about silver. Lots of people getting fired up about tech stocks, lots of people getting fired up about Bitcoin, cryptocurrency, but silver remains unloved. And, silver is really not going to take off until that changes, but I think that day is coming. And I like to buy things when they are unloved and when they are hated and when they are cheap. Just my take on things. Feel free to let me know what you think about any of these topics that we covered in today's video down below in the comments. Thanks for watching, everybody. Don't forget to smash that like button, share the video, subscribe to the channel, and I will catch you next time. Smart Silver Stacker out. Stay safe and happy stacking, everybody.